Welcome back. We're going to do another Atkore update video because they just released their quarterly results, and my plan is to do updates after every quarterly results, at least while I still own the company, right? All right, so I was extremely disappointed whenever I first read them. Anybody who follows the company, the results come out like early in the morning whenever they're going to release them, and I looked at them and I was more than disappointed. I would say like pissed off. And pre-market was down. And honestly, if it wasn't for some wash sale stuff, because I have been adding, I probably would have trimmed some of my position because that's how upset I was at the initial release, right? But of course, the market behaves the exact opposite of what I thought. It was as low as like 70s, like mid 70s in the pre-market, and then it got as high as like $93 a share Friday. So it's just crazy how that works. I'm going to take you through the earnings release, which, like I said, I was disappointed in. The presentation, same thing. The earnings call, which to me was actually the highlight. So I was listening to that on my way to work, and that assuaged me a little bit. Now, maybe that's just good sales people on the management side. We'll go through that, and then I'll kind of do an updated DCF and talk about what my plan is moving forward for this company, okay? All right, so let's go to the earnings release. All right, so here's the earnings release, and to be honest, I was super optimistic, especially after the election. They had hinted that a change in administration was going to be very beneficial, and that's why they wanted to wait till late November to guide for 2025. They had already guided $650 million of EBITDA, which I think translated about $11 a share. So I was expecting them to say, hey, with the changes in administration, with the way things are going, we're actually going to increase that. So whenever I saw this, where is it? Yeah, here we go. Full year adjusted down to 500 million midpoint, and then only, guiding like $8.50 a share of earnings per share. That to me was just like a gut punch. And to me, it's so frustrating because for so long, this company beat the drum of $18 a share, $18 a share. They even like teased last year that it was probably going to be higher in the earnings calls. Anyway, in the last 2 or 3 quarters, it's been just every time they've been coming out with lower guidance, and it's just so frustrating to see that continue to drop. And that's why I was shocked that the stock responded opposite than what I thought. You know, instead of going, I thought we were going to be down 10, 20% or something, and of course it does the opposite, which makes me think that people were expecting this, and I think some stuff that was said in the earnings call helps as well, but you got to take that with a grain of salt now. And to put some more color to this, I'll go to the presentation. So slide 23 shows this bridge, and this is a this is a terrible slide. I'm going to point this out because whoever, and I want Atkore to see it, because whoever put this together, it's insulting to the shareholders' intelligence, I think. That, I mean, look at this, okay? So this is their bridge. So 2024, they made $14 a share. You know, we got one little red arrow, 3 good green arrows, and look, we're about even, right? 7, no, it's half the value. Like this line should be like right there. It's ridiculous. Like, and even that, like this little trick of like doing one little red arrow for pricing normalization, and then 3 green arrows for things that honestly you're not gonna really grow your business by significant amounts by doing these things, like increasing productivity, like maybe a little bit of cost savings. I think they said like $10 million or something on the call. You know, initiatives, capital deployment, you know, that these are minor in my opinion. And then you have this pricing normalization, but they almost like pretend to give them all the same weight. And then the bar being the same height is what really got me though. Like, come on. You can do better than that. I'm not really going to talk about the short report in this video because if you read the short report, the short's claim is that Atkore was artificially keeping prices high. And I mean, this has just not been the case. So like in a way, the guy who wrote the short report was right that prices were going to come down, so that the stock was going to come down, but it wasn't collusion like they said, because if it was, you wouldn't be seeing the results, right? I mean, this is so at least it helps that would be silver lining, maybe, if you want to say that. But anyway, I want to go back up here because we'll talk about, we'll shift to some of the good things with Atkore. So they have this slide about what makes them a compelling investment. And honestly, that stuff has not changed. The reasons I fell in love with the company are still there, right? They're a market leader in an industry with huge tailwinds. They have a great balance sheet, and they have a very shareholder-friendly capital allocation policy. Those core principles have not changed. The big change for all this is that we were told earnings were going to be one way, and it has not materialized that way. But anyway, I think the core investment thesis is the same. Just to highlight the debt. So, I mean, they don't really have anything due until 2028. And even that, by the time they have to refinance that, if they want to just refinance it, interest rates should be down. That's not an issue. And then they have another stuff due in 2031. And if you look, they want debt to EBITDA to be less than 2. And even if they lost half their earnings, right, then they're still going to be under that 2 number, right? So that's still a strong position in my opinion. And I mean, just look at this cash flow bridge. Like, look how much of their cash flow is going to stock repurchases. Like, not just free cash flow, but the cash from ops that's going to stock repurchases and dividends. It's crazy. That's the good, right? One thing that I thought was neat is, speaking of the tailwinds, I mean, this is just a good graphic of, what industries really help Atkore, like who has the most amount of Atkore products in their investment, and it's like data centers, manufacturing, and healthcare. That's the 3 they mentioned in the earnings calls, and I would say manufacturing is something I probably have an insight into. That was slow before the election, but we're really expecting it to start picking up again in 2025, especially with Trump, because there's going to be a big America First push, and I think that you're going to see investment in U.S. manufacturing, which should help Atkore. And the data centers speak for themselves, right? I mean, that's what the whole market's about. I really do think that investing in Atkore is like being in the pick and shovel business for the gold rush, as far as like AI and data centers go. Like, they sell the stuff that you need to make that stuff happen. And once again, the capital deployment, they list out here what their plans are for capital deployment. CapEx is going to be much lower, it looks like, in 2025. I say much lower. I mean, I think they were 150 in 2024. So if they get down to 100, that'd be a 33% decline. So that's strong. And then dividends, repurchases, that sort of thing is going to continue as well. And even the capital expenditures are going to, if you look, they list only 33% of them as routine, which is probably underestimated. I think a lot of these, the question I ask is, like, if you didn't make these, could you still run your business 10, 15 years from now? And that's usually this pie's piece is a little bit bigger, so in actuality, than what companies like to portray. So, but still, I mean, that shows that the capital expenditures that are really kind of an expense are smaller than the whole, right? And we only talk about all that because, once again, I don't think the core investment thesis has changed. I think people have lost a lot of faith in management because there's been some either dishonesty or poor forecasting, and that's caused the stock to just fall tremendously from whenever it was $190 a share or whatever. But anyway, let's go to the earnings call. Here's the earnings call, and like I said before, this is what made me feel more optimistic. Now, is that just the same spinning that happened a year and a half ago that made me feel optimistic that they were going to make over $18 a share? Maybe, but anyway, let's look at it. So I'm going to Control F550. So the CEO, kind of unprompted, says, hey, look, a quarter ago we said it was going to be 650. They're talking about their 2025 outlook and earnings, and now we're saying 550. And they weren't. First of all, they're saying 475 to 525, which is a 500 midpoint. So he's actually giving them 10% more. And the guy catches this and says, "Hey, I want to clarify, because it sounded like you're talking about, the outlook again. are you saying that your 550 number is a very conservative number because you're tired of missing it or lowering it? So is this a conservative number? And the CEO says yes. Somebody else from Atkore like jumps in to correct him, and he's like, hey, just to be clear, like it's 475 to 525, kind of saying, I don't know where the CEO got this 550 number. But anyway, what they're trying to say is that they go on further in the call because this gets hammered. I mean, I recommend just listening to the earnings call and skipping to the Q&A session. But they kind of hit this point that, okay, this number that we just threw out there is conservative. It does have some positive assumptions baked in, which would be, they call it a ramp up in the back half of the year as some of these big projects come online. But in general, it does not account for tariffs, an increase in tariffs, from which would be something that I think we expect. And the reason that they don't do that is even if, let's say, the Trump administration does that, they don't expect those things to come into effect until later in the year for them. And remember, their fiscal year ends a quarter before the calendar year. So theirs ends in November. So everything's a little bit, I guess, that they're a little bit ahead of everything else. So that was just the vibe I would say that I got from this. And it went as far as to somebody saying, is 2025 the bottom? And let me see, Control F bottom. Yeah. Somebody said, more big picture, could 2025 be the bottom from a revenue and EBITDA standpoint? And he gave the big caveat that said, hey, look, we're not trying to guide 2026, but they pretty much said without saying that they're expecting 2025 to be the bottom. So that's a good sign to me, because if the bottom of a cycle is still having you at a 10 PE, meaning like, let's say they're making 850 at this bottom, then that's a great value. I mean, some of the other stocks I've owned and made money on have been stuff that I've bought at the bottom of the cycle whenever they were like just barely making money or losing a little bit of money, but they're at the bottom of the cycle, so they'll have to come back up. So that's optimistic, but once again, this is going after stuff that the management said in the earnings call, which I would say has not had a history of coming true. So you got to take it with a grain of salt. Anyway, let's take all that. Let's go back to the DCF and see if we can get a new fair value. And then from there, I'll talk about my plans. All right, so here's the DCF page. And basically, I'm going to take $8.50, which is their new 2025 guide. But then I'm going to assume that it is the bottom and say 11 here, with a 5-year growth. Well, it would be 4-year, but anyway, 5-year growth at 10%. So that plus 3% perpetual growth rate has a net present value of $101 a share. Anyway, so as you can tell, this is significantly different than, just shoot, 6 months ago, I thought it was 180. And I thought that because of how management was talking. But anyway, so I would say I was definitely wrong there. But personally, I don't see myself selling any of this $9 a share. And I'm definitely not at 100 either. I'd probably have to get 50% higher than that for me to consider start trimming again. Kicking myself for not unloading some at 190. Like, that was the old me would have totally sold that whenever I was doing more kind of swing value trading and less of this complete buy and hold beholden to Charlie Munger and all that. But so I'm kicking myself a little bit about that, because I've had way more success with, taking advantage of market swings up and down. But anyway, my position is, look, it's still my largest position. I am not selling. Definitely not selling for a loss, but I'm also not buying more right now. I think it would have to drop for me to buy more. It'd have to drop, and even then, I don't know. It'd have to drop in the 60s for sure for me to add. But that's just my thoughts. I think what the potential upside is. It's just frustrating that the value's kind of been erased in the course of 6 months. So anyway, I'll do another video on them soon. I'll do a Jack update video coming up because they're actually pretty sizable for me as well. Maybe after Moana 2, we'll see how that does. It's crazy how you got to watch those movies to predict how the stock's going to do. But anyway, that's all I have. Let me know what you think in the comments. Do you hate the company? Do you distrust management? Are you riding with them? Let me know. Let me know your reasons, and let me know any other companies that you think I'd like to look at or that you'd like to see a video on. Thank you.